ratings matter because a lot of, as you would well know as accountants, a lot of organizations, pension funds, investors, particularly those in the retirement industry, will have a mandate as to what they can invest in, and it should be investment grade. We still have a couple of notches above that, and therefore they do matter. But the ratings agencies also talk to all of you. It's not just what government does. It's not just what the Reserve Bank does. They talk to us, and they sort of look at what is your program of consolidation on the fiscal side, what is happening with monetary policy, what is the state of organization in terms of inflation growth. All of these things matter. But what they also do is talk to everybody else about what do you think. And South Africa, I think, is unfortunately notorious in talking ourselves down.
How low can you go? 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 How low can you go?
It looks like Snoop Dogg and the guy called Psy have teamed up again, hasn't it? The IMF says it may cut South Africa's growth forecast, and after a song like that, you would expect it. Investors are worried, though, about a possible credit rating downgrade from both Fitch and Standard & Poor's on Friday. And it's not any Friday, it's Friday the 13th. The rand, however, has been in sort of a recovery mode from a 10-week low it hit a week before retreating. This is Tonight. I'm Bruce Whitfield. Tonight, we take a look, if you're brave enough, at our currency. Joining me this evening, RMB's John Cairns and Mohammed Nalla, who's the head of strategic research at Nedbank Capital. Of course, the ratings agencies count. They're the only ones, however deeply flawed they may be, however deeply flawed their history may be, Mohammed. I mean, here's a situation where funds, as Jill Marcus mentions, are mandated. If our ratings are downgraded, we could lose foreign flows and the rand could go to hell in a handbasket.
Well, indeed. I mean, Bruce, ratings agencies count, those mandates count. Thankfully, we still have 2 notches before sub-investment grade. And that's really the reason why, even if we get a downgrade this week, it will still leave us in investment grade. So those mandated funds, those index tracker funds, are not compelled to sell South African bonds just yet. That being said, your investors or your institutional investors with much more flexibility around their mandates, they might start lightening the load in terms of their holdings of South African bonds. Yes, last week we saw nice big positive inflows into the South African bond market specifically, but that's related to this global stimulus. So I think if we do see a ratings downgrade, how much of that is possibly priced in? I don't think we've seen much weakness come through in terms of the bonds, and maybe it's priced in already, but you might get that knee-jerk reaction before we see a bit of a pullback.
Jill Marcus also playing down the likelihood of a ratings downgrade, saying it's not just about the data, it's also about perceptions, and there's a lot of soft stuff that goes into it as well. If you're a ratings agency, John Cairns, have you got a great big red pen and you're poised to put a downward arrow on South Africa's rating?
Yeah, I think 2 good reasons to give us a downward rating. So what we do at RMB, we look at the key data, the fiscal metrics, the current account, etc., and then we model ratings as they actually are and how they've been over history, and we get a pretty accurate reflection. So of course we can't capture all the variables that the rating agencies look at, but based on the variables, those simple variables, the story is quite clear. We have deteriorated. Our fiscal metrics have deteriorated, the current account has deteriorated, our growth has deteriorated. So that's one, is simply the data. And second, if you look at what the rating agencies have been expecting and what's actually transpired, the last communique we've had from Fitch and S&P, they've both been looking for growth closer to 3% this year. I mean, we might be down at 1.5%. So
if we're lucky.
Yes, exactly. So definitely a deterioration. So we at RMB, we think S&P is going to downgrade the sovereign rating, and Fitch will move us to negative.
Does it match your view there, Mohammed?
We would actually think that the right thing to do, I guess. I think there's a very high probability of a downgrade this week. But we've just got a new cabinet. We've got a new finance minister. We've got the medium-term budget policy statement in October.
So I think all the more reason, some cynics would suggest, to downgrade. You can always upgrade later.
You know, I don't think they'd like to bounce these things around. Yes, we've been on negative outlook for going on 2 years with S&P. So there's a very material risk of a downgrade. That being said, from around last year's medium-term budget to now, the fiscal consolidation story has been one at play. Last year we were lucky. We got an upside surprise on the revenue line. Whether that persists into medium-term budget, again, you know...
That's 2 things, though. That is 2 things in a sea of uncertainty.
Yeah, no, we really do have a very high probability of a downgrade. I do think, however, the more prudent thing to do would be wait for the medium-term budget for evidence of whether there is fiscal consolidation or indeed more fiscal slippage. If that evidence is very profound, then yes, the next review date is in December. But the big question mark is, will they wait till December? Can they afford to wait till December?
You know, we run our numbers. You could even argue that South Africa already justifies two rating downgrades. If you just
explain, please.
No, so again, if I go back to the model that we run, so we try and model the actual ratings across 130 countries through time, based on a subset of data. As again, I'll say the agencies are going to be looking at much wider thing and a lot of the soft issues. But just on that data, we're already starting to slip into that's a two-notch downgrade. And remember, our CDS prices are probably already trading there. So the market's already moved in that direction.
Our graphic at the beginning pointed a very, very depressing picture of currency deterioration over a very short period of time. Just how low can we go? Is this currency market pricing in your worst case scenario, John? Or is it more optimistic like Mohammed's slightly less worst case scenario?
No, I don't think it is completely pricing in the rating downgrades. It's hard to tell that, but and I'm sorry, I'm talking about the currency now. The CDSs, the EMBI, I think that has been priced in. But in the currency market, you've seen some weakness yesterday in the currency market. I think it's starting to reflect these concerns, indication that it hasn't been priced in. If you read the stories about the ratings in the press, most of the comments probably more along Mohammed's line that maybe we'll get a rating downgrade,
That's
but
the
it's not sure.
spin doctoring working then, is it?
Yes, but the point is, what you're reading in the press is still a bit 50-50. So if you get a downgrade, I think we will get quite a bad reaction. Nice time for exporters to jump in, lock in there. Importers maybe want some protection before the event.
And Mohammed, currency view?
Yeah, so I think I agree with John in that some of it's probably priced in. When you look at the CDSs, heck, we trade in line with Turkey. That's actually rated much worse than we are, and that's 2 notches below where we are right now. With the Rand, yes, there's the possibility we head back to around that 11 Rand mark. A couple of key technical levels there and thereabouts, which I think may prove a little bit supportive of the Rand. That's why I think we'll get that initial weakness, what I'd call a knee-jerk reaction, and then subsequent to that, we're likely to see a little bit of a pullback. That being said, you correctly hit the nail on the head. It's the less worse story. Regardless of how you slice and dice it, the macro fundamentals continue to look poor. There has been a deterioration, and so even if they don't do it this week, the likelihood is that they will be doing it at some point in time.
But it's interesting you mentioned Turkey there. So obviously at the turn of the year, we are talking about the Fragile Five. We remain higher rated than the rest of the Fragile Five. Yet all the other Fragile Five have made a lot more effort to correct their imbalances than South Africa has. A third reason possibly to think we could be downgraded this week.
An economist gave me an off-the-record briefing the other day, so I cannot name this economist and I cannot even identify their gender. I can do absolutely nothing, not even hair colour, to suggest who this person might be, but to say that the Reserve Bank is talking the Rand weaker. We saw the Rand trending quite strongly. It is in the 1020s against the dollar. Up until Friday, 10 days ago, when Daniel Minele, one of the many deputy governors at the Reserve Bank, said, look, we're in the interest rate tightening cycle, we have to raise interest rates, and ever since then we've seen the Rand on a steady slide. This particular economist suggested to me that the Rand was actually trending towards stronger than 10 at that particular point. And what is the Reserve Bank talking about, raising interest rates in an environment where growth is in such dire space that raising rates is a diabolical concept?
Bruce, I don't know who made those comments, but I disagree with each and every one of them. So first of all, the reason why the Rand turned around was a combination of global factors, US Treasury yields pushing up, and then just a string of local negatives. So the two trade figures that were poor, PMI that was the worst since the crisis, GDP below expectations, and uninspiring cabinet, combined with the global scenario and popped up. Furthermore, I think they do need to raise interest rates. It's pretty clear. We've got inflation above target. The Reserve Bank, I think, is spot on. We need to get rates up.
And ultimately, lastly, raising rates could even lift the currency.
Exactly. Lastly, raising rates is positive for the currency.
Ultimately.
Yeah.
The one flag for me, so I mean, we take a slightly more dovish view on the rates outlook. So we think there's probably another 50 basis points this year, and then probably a much flatter profile in the markets priced in. And if you just look at Brazil, for example, as a slight analogy there, Brazil started hiking rates at the beginning of 2013, very aggressive hiking cycle, that massive downside growth disappointments earned themselves a credit rating downgrade in the process as well. So there are all of these dynamics at play. That being said, you know, the Reserve Bank, yes, I think there is possibly another hike, maybe two in the offing.
John Marcus today talking about 25 basis points at a time, which is it's taking a very light cane and just a little tap across the knuckles.
That in and of itself tells you that they're aware that growth is completely abysmal and that a very aggressive hiking cycle will exacerbate the downside growth risks, something that I think they're cognizant to not do. Even though their primary mandate remains price stability, they remain cognizant of that growth outlook. They were quite vocal about that even at the MPF last week. So I think they've got a very delicate balancing act. I don't envy them, and I wouldn't want to be sitting in those in their shoes. But the probabilities are, if their inflation forecast deteriorates any further, and they currently do see it coming back within the 3 to 6% band, if that deteriorates, and it's about the trajectory on the rand, very quick, very sharp, sudden move upward, they will probably be compelled to hike those rates.
This time last week, we had Papa Bear and Papa More Bearish, Mike Schussler and Chris Hart in. Both concurred that we were already in recession. Views?
The definition of a recession is technical, so it's 2 consecutive quarters of negative growth. We've had one.
Yep.
So officially, no, we're not in a recession. A second quarter, in all likelihood, there's very likely going to be a growth disappointment. But remember, it's a quarter-on-quarter view. So you're working off a fairly low base in the first quarter. I would pencil in a low but still positive number, and that's why I would disagree with that view.
Okay.
Yeah, no, we've got the same at RMB, a low but positive number. But just a random deviation around that could push us into negative. So it's a bit touch and go, but I'd say probably 60% that we're not going to be in
Okay, so against this backdrop, you are the ratings agency, you're Fitch, you're Standard & Poor's, you've got South Africa on a negative watch. You've got to, after this conversation, Mohammed, agree with John that there is not a snowball's chance in hell that the ratings agencies are going to leave the ratings unchanged.
So remember, with Fitch, they have us on a stable outlook. So there's the possibility they maintain the rating and they move it to a negative outlook.
Yes.
That's fair. S&P is really your wild card because they've been on negative for quite some time and they are seen to be slightly more aggressive in the market. I think, in all honesty, flip a coin. It's a 50-50 probability for this week. I wouldn't be surprised if they did it, but likewise, I wouldn't be surprised if they deferred it. So I'd still like to stick to my guns on this one. I think that the right thing to do would be to defer it.
Okay, thing.
And then, Mohammed, you think they'll come through in December then with a cut?
In all likelihood, if we continue to see the deterioration in the metrics that we have seen, that has been prevalent, yes, indeed.
Okay, so how low can the currency go? We started asking the question, how low can it go? Don't make me sing the song again, please. How low can it go?
Yeah, Bruce, for the rand, choose a number. The rand's had this history of shooting out. It can reach silly proportions. Has a history of doing big 1 rand 20 jumps in single days. So I don't think we're going back to that, but I wouldn't be surprised if we're back above 11 by the end of the week.
Back above 11 by the end of the week? What about you, Mohammed?
Yeah, I tend to agree with that. I do see it coming back after that. And the reason for that is, like I said, a couple of technical levels, and then it's also starting to get very close to what's looking like oversold territory in the shorter term. So 11 by the end of the week, yeah, that's literally a whisker from where we are right now.
Happy note. That was RMB's John Cairns and Mohammed Nalla, the head of strategic research at Nedbank Capital. Papa even more bearish and Papa the most bearish of all on Tonight with Bruce Whitfield. Thank you for watching. There'll be more tonight, tomorrow. Until then, goodbye.